Hello and welcome. Today's date, well, we're entering the 17th day of December 2020. My name is Derek and this is the Money Charts channel. All bets, trades, and of the like, all that is within each his own risk and their own reward. We're going to be taking a look at Ripple in this video. Go over some Fibonacci mathematics, just talk about your basic and fundamental, maybe a better word, tactical analysis, the way I like to look at it. So let's get started. So within such, we're looking at Ripple against the Bitcoin. Currently 2,637 Satoshi against such, and it is December 16th, 6:49 p.m. Eastern Time. And one of the very important things to note is this rally. November 21st through that of the 24th. 4 days. The open was 1,767 Satoshi on the 21st. And in less than 4 days, it hit a high of 4,264. Well better than doubling. 2.5x or something sick like that. That's the way these markets oftentimes will move. Is large moves. And I mean, this is just like a start, like a sampler size, get her going kind of deal, like first gear to second gear to third gear coming, and second gear coming, if you want to look at it. Reversal of trend as far as, okay, you're in an obvious downtrend in here. Here's an attempt to neutralize the situation, breakout in here. Obviously didn't break out from this point. Did a very poor job in neutralizing the situation, although it kind of did. I mean, if it did, you could say that this little bit in here and this little bit was failed breakdown. However, oftentimes these moves, you get these failed moves beforehand. Is this one? I'm hoping so, because I do like the Ripple holding right now, and I do have a good holding of it right now. And I wouldn't be surprised if this thing is going to take off. But next stage after this neutralizing a down move, and it's a combination of going sideways and barely down in here because it was a low rate of descent and such within this move and this move. But then you establish a level of resistance, and most certainly that was the case in here. Come back to where you came from. Come back to the 18 average and stuff like this. Okay. That's what it's done. I mean, still got to rally and break north of here. It looks like that's what's going to happen. And then the next thing is breaking this level of resistance. Then you can start to talk about this going to 6,000, 8,000, 10,000. We could, well, this 10,000 right in here. This previous high in here is 20,000. And that would be like a 7x gain. And then you want to talk about a phenomenal move. Well, in here, 4 periods. The open on December the 11th, 2017 timeframe was 1,527. And the high, less than 4 weeks later, a hair under 23,000. And the low from the December 4th period was, well, I'm not going to count the 2. But the close was 15. I'll count that. The 1527. That's the same as the open pretty much. But 1400 on this low. So it went from at least 1400 up to 23,000, which is a little better than a 15x move in under about a month. That's the sick things that can occur at any given time. And it's all about reacting to the situation. So how did one react to this? Well, how is there better ways of looking at it kind of deal? But you just got to realize that these potential large moves can come in existence really at any given time. So back again to the daily. Key high, key low. Let's do some Fibonacci retracement. I do exponential one. It's a little different than how most people do it, and how if you got some sort of program software that like a charting software that tells you the Fibonacci, I think there's about a 90% chance that I'll call it wrong, and I would never use it unless we're talking about like the Dow Jones on the 1 hour time frame or the daily time frame or something. Other than that, I'm not going to use it, or Bitcoin on the hourly time frame, or any market on the hourly time frame for the most part, whatever. But within this, I'm not saying that because when the move from high to low is extreme, you want exponential, and when it's 2x, that's already big enough as it is, and this is greater than that. The high is 4,264. So I'm going to put in the variable in here. And I want the lowest level, which is like one of these lows back in here. We can see at this low at, they're all the same for the most part. So 1563, and then 1558, 61, 56. So I'll go ahead and take the 56 low. And in itself, that's going to be like almost 3 when you divide that number together. You get like 2.8-ish or so. To the root of these percentages, 0.382, 0.618, 0.236, 0.764. The up target is 1.618. I'm not going to be using an up or down target. And the down target is negative 0.618 as what you would do to the exponent. And then you take that number and you multiply it by the low, in this case, 1,556. Let's take a look at these numbers. Let's start off with 76.4, 33.61. But first we're going to scale it like this. And put in that number there. Below that would be a 30, that's a 23%. So it's 0.764. So from low to high on the way up, it's 76.4% to the way up. And on the way down, it's 23.6% on the way down. So it's a 23.6% retracement. And then the next number after that would be 2,901. So let's go ahead and put a line in at that variable. And what will be 38.2 or a 61.8% down correction, 2,287. And it's always luck when they hit, isn't it? I always say that. Alrighty then. Let's see here. Oh, okay. Look at how it hit there. Piercing extra by like 20 plus points, 24 points. It was luck. I always say that. Okay. And we look at how this first one played at 2,900 within this level. And let's even look back just for something to do at this entire run. Because the 23.6, this one here, it pierced extra to the upside here, but it did stabilize at this level, supporting in the area here, and the area here, and the area here. Breaking down, and then right to this level. We resist it pretty much perfectly here. Again, perfectly. Now it looks to break out. So, okay, interesting spot. So the market indications here would be saying the morning of November 28th that, hey, Ripple, good to go long here, but be careful because it might not work, and it didn't, of course. And there you see this down move and how it's starting to show the resistance at this point after you were first showing support, unable to. I mean, it held on this area for just like one wave here. Then it was resisting it really here. And then it was so long gone after that. There's a song I remember thinking, I don't know if it's Brooks or Dunn or someone else and then of course it was just luck. How 2901 acted as it did, but it did. And then again at 2901. But what it never did do is resist that level. So that in itself was kind of interesting how there's a lot of opportunities not to sell could have came in, because if you're looking to buy at fib and sell at fib, well, buying at fib was easy, but you were not able to sell at the 33.61. But as it went, though, you see all this consolidation in here. The breakdown period was 4 a.m. December 12, and then down she goes and right to fib at 22.87. And it's been a decent amount of time there. When it got there at 20 hours at the December 15th, not leaving there until today at 8, which was just a span of like 3/4 of a day. But it is how it is. Actually, 1, 2, 3, 4, 5, 6, 7, 8, 10, 12. Yeah, about 3/4 of a day. But in a phenomenal run, and just a decent sized move to go from like a little under 23 to a little under 27. That's a differential of like 400 basis points. That's over 400. That's about 20 something percent, or almost 20. So just a fantastic move so far for the Ripple on this stage. And on the daily chart, again, you have your situation like Like a move like this, how was it able to hold what was that fantastic 4-day move? Well, that top was November 24th, and we're on the 16th of December, so 16 days plus another 6 is 22. So 22 days of correctionary movement. And we've had a combination of both time and price corrections. We had the price correction from the top to this bottom, and then another price correction from December 11th ending today. Now, how is this? And this is, to me, a statement that we should be going to 29.01 on the short term later today into the next few days. How we react from that point on, we'll see. It'll meet up with the 18 average and the newly declining one on the daily as it does. Right now, the 18 average of highs is barely above it, or noticeably above it, and the lows is now noticeably below it. So it'll be in that play in there, and it's got to get above the 18 average of highs and to state, okay, everything's good to go. And the Fibonacci that you'd be looking at on the way up, yeah, these numbers will still work out, the 29.01 and 33.61. And in fact, I can guarantee you they're going to coincide because that's how it always works on a just mathematical level. If you have perfect support at the 61.8, and then you calculate the Fibonacci from this low to this high, then the 29.01 would come up exactly. I'll show you what I mean. So what we'll do here is I'm going to change the low from 1556 to 2287. So the next number is 2901, which is the exact number there. 3361. So 3681 will be an interesting number in here, and we can see here that 3680. I'm just curious in how 3681 looked on the hourly. I always do that when I trade. Or look at this. This thing with 15. After all, these big numbers are really short term. 3681. And it pierces extra, of course. That's just luck. Missed it here, though. Missed it here on this rally point. But anyway, yeah, that's one way of doing it. But those numbers are exactly the same as I stated. I'm just going to fast forward this. This is going to be like super fast. No, it's not. It's already there. Quite the opposite, super fast. But this move right now going up is just that. Nice, super fast rally. And I have been noticing the volume on here has been an interesting aspect as well. I don't talk, and as far as indicators on here, I mean, everyone shows like so much, and they have like 20 different things, a line here, a line there, this little gadget there, this little, and then these sub screens for like things like blah, blah, blah. Like oscillators and whatever. I don't care about that type of stuff. I attempted to learn things like that. And when I made my own charts, I actually made like upper and lower bands at one point that had formulas. Well, what I did is I looked at the volatility that I had within the 18 average in here. And then that decided to me how far ahead it would be from the 18 average of highs and lows. And then its rate of ascent that it would be that much from the highs and from such. And it was just the way I did it. It was pretty fun to do, but it was, I don't really need it. I can tell when markets are overextended easy enough without that indicator. So I'm like, don't need it. So I mean, what do I need? I like the obviously 18 average I always use, Fibonacci points. So that's basically it. But volume, I'm never going to not have volume. It is really, really important. I just don't talk too much about it, but volume can be big on two different levels. Like, I guess some of the two different things, the two easiest things to teach about volume. One, well, correctionary moves. When you see corrections happening on low volume, that's one thing. That can be a very bullish sign, which is what you can see in here. That's good to see. But high volume occurs generally in two different spots, and that's bottoms and tops, really. So when a new rally starts to come into focus on, what's usually going to happen is you're going to start off with significantly large volume that you've had from before, which is exactly the case you can see here. The lower volume is bigger than what it had before, but lower from this point in here. So we're continuing to keep high volume in consistently. But what you're generally going to start seeing is the markets start to make a nice pattern of higher, especially if it takes a long time for these runs, to have like higher highs and higher lows on what would be lower volume more times than not than what you had before. Or if it extends newer breakout volume, that would be the biggest volume you'd see till the top. Meaning, maybe in the next 6, maybe tomorrow, 5 days from now, 10 days or whatever, we have volume that breaks this. Goes up to like here or something. Or it's like 50% more, whatever. And then, of course, it's going to have maybe 2-3 days for like this. Then it's going to go lower. But you're going to see that for the middle part of the rally, that these rallies will happen on maybe good volume like this, but not big. And then it's going to finish its top on big volume kind of deal. There's the top on high volume here. It's not much of a move at that time, but that's just very, very common for that to be the case. Let's take a look at Ripple against the dollar. And the first thing that I notice on here, maybe you can try to guess what it is, because I'm just looking at this for the first time. I can't say more times than not, but more than 50%, I guess. When I do these charts, I've already looked at what I'm going to talk about beforehand. And against Bitcoin, I did. But I'm looking, why not do against the dollar? And I haven't really looked at this one. But one of the things we've been seeing a lot lately, I haven't really looked at the Dow and definitely not the stock market, but is the failed move before the actual real event happens. We first establish this level of support here, and then we establish it around here. Then I see all of this coming down like it is, telling me the breakdown is occurring, and it's seeing an instant rejection, thus a V-shaped formation. Okay, interesting. I like it. That's pretty cool to see, actually. Let me calculate Fibonacci here for something to do. I'm not going to count this low in here. No way, no how. I mean, this low has been more accurate than all 2 number. So let's just do 222 units. And a high of 827. And that's a bigger, I talked about the Bitcoin, the one before being like a 2.8x move or whatever. Well, 827 divided by 222 is like, 888 would be 4x. So we're talking, and 666 is 3x. 777, I guess, would be 3.5. So we're looking at about like 3.8, 3.9 here. With that being said, key numbers. First one on the way down is 60 cents, which is where we're at now. Okay, I don't really see. It's congesting at it, and there was resistance here, and I'd have to look at the 4-hour and hour to see how much better it did. But yeah, it was in that area. And then 336.7 cents below that. Interesting. Okay, that didn't even come close. Right down here. 36.7. Let me look at this again. No, 500. That's it. Yeah. Of course it didn't come close. 500. It's just, oh my goodness. That's just, wow. Oh, crap. Wow. Okay. Yeah, and that's, again, the first thing I seen without even looking at Fibonacci. What huge that 50 cent mark was. And yet, on its 38.2% down correction, you can see it was starting to break down in the last couple days below it, but it never did it. And then to have this fast move up to the 18 average of highs like this. This is telling me early indications of a failed breakdown and a fast move to be following here pretty soon. Okay. I really hope it is. I have a very good holding of it right now. Weekly chart and all this type of stuff. Let's get rid of this slime. We don't need it in here anymore. Just a beautiful pattern so far. It has been trying damn hard when I look at this. That's one of the first things that I was saying. And finally, and I say trying so damn hard as in, here's your attempt to break out here. It failed. It had a small attempt over the 18 average of highs here, unable to hold the lows. I never had much of a breakdown. And then most certainly having a noticeable break above the highs and a completely massive fail in its correctionary phase. There's your 61.8, 76.4 correction from this high to this low. And then when you see it starting to break this, key leg lower, oh hell yeah. And then coming up to this resistance, another move down below here. I don't know the validity of that move or not, but either way. Another attempt to get above here, and, well, correctionary success. Several days staying within this 18 average band. And whether this is a real move or not is irrelevant. I mean, obviously, if it's real, okay, another failed breakdown before the move happens, whatever. Well, that's just the way the markets move. And then these level of resistance. Oh, we break high. Get past this high. Get past this high. Get past this high. Now supporting this particular high. We've resisted this high so far. So after that, well, you'd be the Fibonacci from this low to this high. Why not? Let's calculate it. And then you have Fibonacci from this low to this high as well. But we can see from this low to this high, it's been nothing but a successful correctionary phase. This thing was trading at little more than a half a penny. A little under two of them for 1 penny. And now for $1, you're going to get a little under 2 for $1 now. 100 times higher. So, successful correctionary move. But so to me, I can just tell that's a 38.2% successful correction just by looking at it. So I'm not going to calculate that one. The high in here, 350 what? $3.53. So here we got Bitcoin just breaking it. So in all these highs, and all these altcoins have still got a long ways to go. So 353 cents. I'm going to use a low of 14 cents. Do I want to use this? And let's take a look at the daily chart. That will help me determine it better. I want to use exact numbers if I can. Oh, it's to even do. I mean, you can see it. Let me just. Like this here, I can't count this move if it's a pierce like that. I just can't count that. So I really got to take like 12.5, I think, on this low here. 12.4. So then 353 divided by 12.4. That's close to 30, but 26 or 27, 28. Key levels. First off, we have 27 cents. I mean, we're obviously north of that. We're at 57. So there's a 20. Let me just go to the daily chart for this now. Put in 20. Oh my goodness, it's just luck. I mean, because I'm looking right here and then. Ooh, hefty failed breakdown. Holy crap. Okay. So basically what I'm looking at is like this box formation now. Well, we'll see what happens, but interesting if it does. That's like a very lengthy box. I don't know if I really want to classify that as a failed breakdown or not, but I kind of do think this kind of is, though. Even still. That's the first one. Then going north of 27 is that of 45 cents, which of course we're north in that. So that's the 38.2% retracement. No resistance, or very little. Interesting. Okay. As we can see here, there's no resistance, and there's coming back down to support it. What do I know? Clear break to next level is what that tells you. The next level comes in at basically $1. 98 it says. But we haven't been there yet. And these things usually pierce extra. The move's not over. That's what that tells me. Because when it broke past the first fib, well, second fib, I suppose. When it broke past the 45-cent fib mark, let me just take a look at it with less periods. This is just sick on the support here. Okay, how do you do? Extremely weak resistance here. Let's just take a look on the hourly how resistance this was. I mean, just wow. It was resistance. It got there first at 1800 hours on November the 21st. Exitation was 6 hours on the 23rd. Okay. So, I mean, that's extremely weak resistance, to say the least. Then it pretty much piercing, yeah, that's odd. Piercing less on the comeback here. Oh, that sucks. That either be sucks or perfect for you, maybe, if you're trying to buy it back. Because I always talk about, if you want to buy safe, put a little bit extra on that 45 number. Maybe go like 46 or 46 and a half. And if you go 46 and a half, it hits, or 47, it hits, kind of deal. So the safe one would have got your buy order, which means you could have maybe hit a sell order in here. And then you can see it comes back down again. And okay, so if you did do the safe 47 cent for whatever buy here, then you sell up here, then you bought again at 47 cents again. And now you're like, okay, maybe you got a sell order ready to go at like, say, 60 something or whatever. You haven't hit it yet. Whatever. But, yeah, that's interesting. Yeah, it's definitely going to hit that. I can't say definitely, but all signs point to it breaking north of piercing extra, like $1.10, $1.15 kind of deal. And usually a decent pierce, so $1.20 even. And I say that because whenever you have a nice little extended move that's, yeah, it's almost a large pierce below, if you will, but very much noticeable. That's why I say large pierce below. And then you have your comeback move, and then you break above it. It's usually a noticeable pierce above. That's just what I've noticed in many experiences in the past. Breaking north of 98 cents brings $1.60. So that would be the next key level after that. I can calculate Fibonacci upside for something to do because I know how to do it. What I want to do is I want a big move, and I most certainly can see it here. We got these breakout lows here near 0.0037. So let's just let's just do the break. Let's just do these lows in here. So the breakout lows of the March period is the 215 handle, which is we'll do 21.5. So 21 what? 21, of course you can see the low says 0.021. So 21 1/10 cents, I guess you can say. So I would need the 3 decimals on here. So the low on here, or the high, is, I need 3 decimals, so 3,532 when I round. No, I need 3,517. 35317. Is that right? How many, let's go back to this 21 number. So 21, that's 1, 2, that's only 3 decimals. So that's, there we go. So at a high of $3.53, what I'm looking for is this 38.2 number, because whether it has that correction or not, I want to know what its variable is, because that's going to give me, that to me I think is the most accurate way of doing it, because it's almost like saying if this thing is unable to have a good price correction and really does lack of price in a lot of time, then it doesn't get as good of an upside number, and I think that's false. I think regardless of the fact, if anything, this one would have more. But with that being stated, what I like to do to make it just what I think is the fairest way, for my case, the most accurate way of doing it, is to do high of 3,531 divided by whatever this 38.2 number is, which is $1.51. That would work out to a 61.8% down correction. So that divided by that to the root of 1.618, multiply the low again of 151. So I'm going to put 3531 and 151 in. Or let's just do $24.76. $25. Okay. I'm going to make an announcement, ladies and gentlemen. I have an upside target for Ripple to go to $25. That's just how it goes. How long will it take? It could take 6 months, 8 months. I think it's going to take closer to 2 years to do it. But yeah, $25. I think 30 to 40 might be more accurate on an extra Pierce. What market's going to do what the market's going to do. And anything you do is always, like I say in the intro of every single video, your own risk, your own reward. For myself, risk-reward management is always job number one. And when you can get to the statistics, understand the statistics to risk-reward in whichever ways you're doing it. And the biggest one for me is obviously it's your bankroll management. Then you can get better results because for my and what this is big for in the gambling sense, if you like to call it that, but there's so many different avenues in which this can be helped upon. And I hate to say I'm an expert at it, but I kind of am, I think, as far as how to manage it in bankrolls. But whether you're doing it for what I do DraftKings daily fantasy bets, which is pretty much like poker. And the poker, that's almost like you're day trading, whether it's stock market or this market, this be a crypto market or whatever market, you're gambling. And you have funds, you got a bankroll that you're managing. So how much you're betting here and those strategies can be very, very important. And I literally like to manage the risk and the reward faction so that I can maximize my rewards while minimizing my risk really at the exact same time. And I can do a very damn good job at it as well in a lot of the games in which that I am playing. So by understanding a lot of those different levels, then understand the risk-reward management as far as your bet itself is very important too. Okay, well, stock market could go up to a certain number, so Ripple go to $1. Okay, mathematics stay from here at 60 cents. That's a gain of like, say, okay, maybe we're like talking about 77% gain. And then a loss of like, if we got a 25% move here down, and you do those numbers together, that's ways of doing your risk reward as well. Thank you for tuning in. Have yourself a great day. Bye-bye.